Have a nice day. I am Chandrika Veerappan, Senior Commissioner, Customer Support and Promotion. I warmly welcome all of you who are referring our awareness program through online. This time our branch, Customer Support and Promotion Unit, has been released English version of how to fill in corporate income tax return for 1920 year of assessment. Before that, we have released 6 awareness program regarding to the return fill-in and e-filing to the YouTube in Sinhala language. Glad to tell you that were very success. Why? Many people gave us their comments with highly appreciation. So according to the request of many of you, we decided issue the English version also. Near future, we hope to issue the Tamil version also. However, I believe this program will very helpful to you fill in returns correctly and easily, such as difficult period effect of COVID-19. After referring this valuable program, please give your feedback, give your comments whether is it good or bad and what should be improved. It will help us to improve quality of next program. Thank you very much all.
Welcome to the presentation on corporate income tax return of the year of assessment 2019-20. In my presentation, first I will explain who are the taxpayers required to submit the corporate income tax return in forms specified by the Commissioner General. Then I am going to explain the basis of income tax computation for this year of assessment. As you are aware, there are some tax proposals administered by the Commissioner General as he communicated to the taxpayers in a public notice on April 8, 2020. Thereby, new tax rate structure has been introduced with some exemptions. Therefore, you are required to compute the income tax payable amount by applying the tax law as available in the Principal Act, that is Act number 24 of 2017, and with the changes which would be made in an Amendment Act but implemented by the Commissioner General with effect from January 1st, 2020. In order to facilitate the tax computation, Commissioner General has provided the required guidelines, and those guidelines will be explained in my presentation. Thereafter, I will be explain 2 examples and you can have a better understanding regarding the tax computation for this year of assessment. Finally, I will show you that how you can enter those amounts in an approved form of the corporate income tax returns. Corporate income tax return is the approved form of the Commissioner General for all persons other than individuals and partnerships. Therefore, persons such as companies resident in Sri Lanka or non-resident companies, government entities like corporations and other government-owned entities, clubs and associations, trusts, unit trust or mutual funds, NGOs, charitable institutions, ETF or provident fund or pension fund or termination funds are required to submit their returns in this format. There is no specific place to show your entity type in the return forms, but the same we can discover through the tax rate codes, because you have to use tax rate codes applicable to your entity when filing the Schedule 4 of the return. Now I am going to discuss about the basis of tax computation for year of assessment 2019-20. By way of an amendment to the Inland Revenue Act, the Commissioner General will receive the power to issue guidelines regarding the computation of income tax for this year of assessment. When applying those guidelines, there are two periods for the year of assessment, which we called as first period and second period. First period is having 9 months from April 1st, 2019 to December 31st, 2019. For that period, changes announced by the CGIR are not applicable, and therefore you have to apply the provisions of Inland Revenue Act without any changes. Anyway, if any proposal is implemented with effect from April 1st, 2018 or from April 1st, 2019, like agriculture exemption, you can apply those proposals appropriately. Second period is having 3 months. That is starting from 1st January 2020 to 31st March 2020. For the second period, you can apply the statutory provisions of the Act with proposed amendment to the Act. In applying the law, we have to segregate the income of companies over these two periods. So, pro rata basis is the approved basis for that purpose. However, actual basis has also been provided for certain circumstances where the pro rata basis is not practical. Other than in those circumstances, you cannot apply the actual basis for this segregation. In other words, you are not required to prepare two sets of financial statements for these two periods. If you are a company who is preparing financial statement for a different period from the statutory year of assessment, you can calculate the pro rata basis appropriately. If the accounting year is not from 1st April 2019 to March 31st 2020, then first period is the number of months from the starting date of the accounting year to 31st December 2019, and second period is the number of months from the date of 1st January 2020 to ending date of the accounting year. For an example, if you are preparing financial statement from July 1st to June 30th, there are 6 months from the there are 6 months before the implementation of proposals and 6 months after the proposals. Hence, pro rata basis is 6:6 or 1:1. For calendar year companies, pro rata basis is 12:0. Then they can't apply the implemented proposals with effect from 1st January 2020 for year of assessment 2019-20. But they also can apply the proposals which have implemented before the date of 1st January 2020. Generally, all companies are required to compute its assessable income from all sources and taxable income as one amount for the entire year of assessment. That taxable income should be divided into two periods by applying the pro rata basis. There are some special circumstances where you have to differently apply the previously explained basis. If you receive dividend income, then it can be ascertained on accrual basis. Accordingly, actual dividend received or derived during the first period as final withholding payment under section 88 of the Inland Revenue Act, and second period as gains and profit from the business or investment according to the facts of your case. The next situation is if there is any exemption in second period based on the proposed changes, 1/4 from the total can be excluded, subject to the adjustments to be made under section 10(1)(b) and 3/4 should also be recognized for first period. For an example, if you are deriving gains and profits from information technology services, 1/4 of receipts you can exclude it from your tax computation together with connected expenses. Balance income should be recognized for first period. As far as charitable institution is concerned, their interest income is a final withholding payment for first period according to the section 88 of the Inland Revenue Act. Therefore, charitable institutions are also allowed to recognize the interest income on actual basis. Actual interest of the first period as final withholding payments, and second period actual interest income as gains and profit from business or investment. As I explained, you have to compute your taxable income as one figure for the entire year of assessment. But in case if you are having losses from business or investment, then you cannot do it. Therefore, in such a situation, you are allowed to compute the assessable income from business or investment with a loss from one source or from both sources. Then apply the pro rata basis, and thereafter you can apply the rules available in section 19 of the Inland Revenue Act in arriving the taxable income separately. I will discuss this matter in my examples, and thereafter you will understand how you can compute your taxable income if you are having losses. As I have explained so far, you have to compute the taxable income of the two periods separately and then apply the appropriate tax rate of the two periods as given in the first schedule to the Inland Revenue Act and as given in the CGIR's notice. According to the Inland Revenue Act, when applying the tax rates for companies, predominant basis has provided for some businesses. If you are doing a specific business and received or derived 80% or more from such businesses, then you are entitled for a concessionary income tax rate as provided in the Act. However, with the new changes, this predominant basis has also been removed. Therefore, it should be applied only for the first period. In other words, predominant base is applied when the 80% or more calculated based on the gross income of the first period. Next, I will discuss my example. First example is like this. This ABC company is manufacturing rubber tube products and local and they supplying their products to local and foreign market. According to the details of the financial statement, during the year they have made sales to local market and made sales to foreign market as well. From the gross turnover, they have deducted cost of sales and arrived to the gross profit, and thereby deducted expenditure and other deductions as well from the gross profit and added other operating income. So under the other operating income, they have interest, dividend received from company A. That means they receive dividend from company A, not from any other entity. So under note it says company A declared relevant dividend from its business profit. That means they didn't use another dividend received from another company for this purpose. So accordingly you have to decide the tax treatment. Next it says foreign consultancy fees. They received foreign consultancy fees from a foreign country and relevant money received to the bank through the foreign bank. So therefore you can consider The same for exemption as provided according to the new proposals, but with effect from 1st January 2020. So it says the service provided in Sri Lanka but utilized outside Sri Lanka, therefore the exemption is applicable only up to the amount earned on or after 1st January 2020. So we'll see how you can compute the taxable part and exempted amounts. Under the other information, it says the company has paid EAC, it's a tax credit you can deduct from your gross income tax liability. Income tax paid as installments according to the CIT return, they have to made installment payments. So they have made 72 million during the year of assessment. Other than that, for this computation, required information provided, sales to local market during the first period and second period are given, and then sales to foreign market are also given. Dividend received during these two periods, actual dividend income has been given, because we have to consider actual dividend income when we splitting the relevant income into two periods. Then donation to approved charity, under notes it says approved charity provides institutionalized care for the sick and needy people. So therefore it's a approved donation. You can claim the donation as a qualifying payment subject to the conditions available. Then it says withholding tax deducted on interest income is 20. It's a non-final withholding payment for this company, and withholding tax on dividend 420. It's a tax deducted on final withholding payment. So these are the information given. From these information we will see how we can compute the taxable income and then income tax payable amount for the year of assessment. As it says, accounting profit for the period is rupees 314,400,000. From that amount, we have to remove the exempted amounts. As I explained earlier, 1/4 of foreign consultancy fee is exempted. Therefore, out of this rupees 1 million, we can remove 1/4 as exempted amount. Thereafter, there are some final withholding payments as well. So the company derived dividend income during the year, and actual dividend derived during the first 9 months is rupees 3 million according to the information. So I have removed this 3 million of final withholding payment from the tax computation. Thereafter, investment income available. Since I am computing business income at the first stage, I am removing this interest and dividend income in order to consider the same as under investment income separately. So interest income derived by the company during the year is 1 million, and actual dividend received during the second period is 1 million. So total investment income is 2 million I have removed. Thereafter, then adjustment made for disallowable expenses incurred on exempt amounts and on final withholding payment. However, no expenses incurred on final withholding payments according to the information. Donation rupees 600,000 has been paid, and expenditure on exempted amount is rupees 450,000. In computing that, I have used pro rata basis for to compute the expenses incurred on these exempted amounts. So Altogether, 1,050,000 has been added as disallowable expenditure. Now I have arrived assessable income amount of rupees 307,950,000. From that we can deduct qualifying payment. There we have donation to an approved charity. It can be deducted subject to the restrictions provided in 5th schedule of the Act. Deduction will be limited to rupees 500,000 or 1/5 of the taxable income, whichever is less. In this sum, lesser amount is 500,000. So I have deducted the same, and the taxable income is rupees 309,450,000. As I explained earlier, we have removed exempted gains and profit from foreign consultancy service of the second period. Therefore, balance amount should be considered for first period. That amount calculated as rupees 6,149,000. Dividend income is available in the taxable income should be considered for second period, because final withholding payment amount of rupees 3 million already removed. That is 1 million we have to consider for second period. After those two items, balance taxable income split into two periods by applying the pro rata basis. Even though company is an exporter, it was not predominantly conducted an exporting business. According to the calculation given under the bottom of this page, you can see that their export percentage is approximately 18%. Hence, applicable income tax rate is 28 for the first period to the entire taxable income. Second period taxable income we have to consider separately, because tax rates are applicable to the each part of the taxable income, not to the entire taxable income of the first period. Since the company is doing a manufacturing business, applicable tax rate for the second period is 18% for their manufacturing business income. However, such part of taxable income from export sales is taxable at 14%, because part of their products they are selling to foreign markets. In order to split the taxable income of the second period from business, I have used turnover basis and applied the relevant tax rates. Dividend income of the second period is 1 million and the applicable tax rate is 14% thereon. Ultimately, balance income is taxable at the rate of 24%, that is representing the interest income of the second period. Accordingly, gross tax liability of the company for this year of assessment is rupees 77,758,000, and from that amount we have to deduct available tax credit. They have tax credit in the form of EAC rupees 3,010,000. Further, they have made installment payment according to the CIT return rupees 72 million. Balance payable amount is rupees 2,748,000. That should be made as an assessment payment on or before September 30th, 2020. Now let's see the return forms, and I'll explain how you can fill those return forms. At the top of the return, you can see that there are two cages. There you have to mention whether you are a resident person or non-resident person by putting a tick. Since this company is a resident company, I have put tick on the first gauge. As usual, we are advising you to fill this schedule before fill this return form by filling the schedules at first. Therefore, we see how you can fill the schedules to the return of income, and then we can get the understanding about the first page. Before going to the schedule, I'll explain about this declaration as well. If your return or part of the return prepared by another person other than full-time employees of your entity, you can put a tick in relevant cage, and part A of the return should be filled and signed by that person. If you put a tick in cage no, you can ignore that part A, but part B is compulsory for you. You are required to fill the part B as a managing director, secretary, principal officer, or as authorized agent. Signature is compulsory, and without having the same, return of income will not be considered for income tax purpose as a self-assessment. Therefore, please ensure that you have correctly filled the part B of the declaration before the submission of your return. When it comes to the schedules, according to the details of your tax computation, first you have to select the applicable schedules. However, Schedule 2, Schedule 4 and Schedule 7 are compulsory. From other schedules also, you have to put a tick for applicable schedules. Any schedules which you have marked as relevant by putting a tick together with compulsory schedules are mandatory for the purpose of return of income. In my example, there are exempted amounts, so Schedule 1 is relevant actually, so I have to fill Schedule 1. But I don't have losses in my example, therefore I can ignore Schedule 2B. We have qualifying payments but no remittances. Therefore, I put tick under the Schedule 3 and put a cross under Schedule 5. We have final withholding payments in the form of dividend and EAC also. Therefore, those schedules are also relevant. But we don't have non-final withholding tax credit and notional tax credit brought forward. Therefore, I put cross in these two cages. Now, it's my duty to attach Schedule 1, 2, 3, 4, 6 and 7 together with Schedule 7A with the first page of the return with other attachment required by the return, required to be submitted with the return. Anyway, I don't want to fill the Schedule 2B, 5, 7B and 7C, and I don't want to attach those schedules in with my return. This is Schedule 1, and there you have to fill the exempted amounts. Under Schedule 1, there are 4 subschedules. First 3 subschedules have not changed when compared with the return of income of the previous year. Subschedule 1A for exempted amounts or gains and profit under Schedule 3 of the Inland Revenue Act. If there is any exemption, if there's any exemption you claim under the new proposals, that amount should also be declared in this schedule. In my example, I have exempted gains from foreign services. and that amount I have filled under subschedule 1A. You can see it. Subschedule 1B and 1C available for exemptions you are claiming based on the transitional gazette. If the exemption has provided in repealed act, it should be declared under the subschedule 1B, and BOI exemptions should be declared under subschedule 1C. Then the totals of subschedule 1A, 1B and 1C should be entered to the cage 10, and same should be entered in the cage 10 of the first page of the return of income. Schedule 1D has introduced in this year of assessment, and if there's any loss from exemption in relation to the circumstances explained under 1A to 1C, then that loss can be declared in subschedule 1D. Total amount declared in cage 10D is not required to enter to the first page of the return, because first page is available for the exempted amounts or gains and profit, not for losses. So whatever the amount you are entering into schedule 1D should be available only in that schedule. When you are filling the schedule 2, first you should fill the relevant subschedules. So we'll start from the subschedule 2A1, and it is available to declare your business income. Then you have to mention the activity codes, nature of the business activity, turnover and the gains and profits. Details of activity codes you can download from the Inland Revenue website, and the link is also available there at the bottom of the page. Total of that subschedules should be entered in the relevant cage of the main schedule 2 under cage number 20.A.3. You have to follow the similar way to enter the investment income under subschedule 2A2, and for other income in subschedule 2A3. Then totals of each subschedule should be entered in main schedule 2, that is summary of assessable income. In my example, I have business income and investment income. So I have entered those totals in relevant cage of the schedule 2. In this case, we don't have losses. Therefore, assessable income from business and investment calculated in a summary of assessable income can be entered into the cages of the return of income or first page of the return. Next, we are going to fill the schedule 4, and later we can fill the schedule 3 as well. Schedule 4 facilitates for the calculation of income tax based on the changes. According to the different tax rates applicable for this year, there are different tax rate codes assigned, and you have to download the tax rate codes from the Inland Revenue web portal. For the purpose of return, normal income tax rate is 24%. All other rates are special rates, including 28% rate. Cage number 90 is available for capital gains. Therefore, applicable tax rate code, reference, quantum of taxable income, applicable tax rate and tax amount should be entered in this schedule. In my example, 28% rate is applicable on the taxable income of the first period, 18% rate on manufacturing income, and 14% rate on export income. Further, I have 14% rate on dividend income as well. So I have entered relevant details with tax rate codes, and total has been entered in page 80. Balance taxable income representing the interest income of the second period, which we will tax at 24%. I have entered in page 100. Then totals of page 80, 90 and 100 should be entered in the first page of the return in relevant cages. Next, I am going to explain about the tax credit schedule, that is Schedule 7. Schedule 7 has prepared according to the order that the department is allowing tax credits. There are two subschedules for EAC and non-final withholding tax credits. First, you are required to fill those subschedules and then fill the main schedule. In EAC schedule, I have entered the EAC payment during the year, and in this case, the company can deduct the total payments. Therefore, I have claimed the total by entering the same in page 140.3.6. There is no anything to fill in Schedule 7B, and total EAC quarterly installments and assessment payment entered in Schedule 7. Total tax credit as found from the schedule entered to the first page of the return of income. Next, we will see the Schedule 3, qualifying payment schedule. There are two types of qualifying payments. Qualifying payments under the 5th schedule and brought forward from during the time when the Repealed Act was operated, provided through the Transitional Gazette. Subschedule A, B and C has provided for the qualifying payments under the 2017 Act. In our example, we have donation to an approved charity. That should be entered in subschedule A as I did here. Subschedule B for government donation and for profits remitted to President Fund or to consolidated fund by a public corporation. You may aware about the fact that public corporations are allowed to deduct any sums paid to consolidated fund as a qualifying payment with effect from 1st April 2019. Same can be entered in subschedule C. Subschedule E, F, G and H should be filled by a corporate taxpayer who have brought forward qualifying payments from year of assessment 2018-19 to this year based on the transitional provisions. Total amount in subschedule should be entered in main schedule 3, and the total is going to page 60 of the return of income. We have to fill another schedule, that is schedule 6 for final withholding payments. According to my example, we have dividend received in first period. For that dividend, withholding tax deducted at the source by the resident company and paid it. Therefore, what I have to do here is filling of subschedule 1 and the main schedule. So I have done it. If the withholding agent has not deducted the due tax, then you have to fill the subschedule 2 and the balance payable amount should enter into the page 120 of the return of income. Now we have filled all relevant cases and the relevant cases of the return of income. So we'll see how you can fill the first page of the return. As you can see, up to page 140, all cases have been filled and the balance payable amount entered into the page 150. So schedule 8 and schedule 9 are not compulsory for this year of assessment as well. Therefore, if you are attaching your schedule 8 to the return of income, then you don't want to submit your manual tax computation. But if you are not filling schedule 8, then you have to attach your tax computation with the return of income. Anyway, schedule 9 should be filled and submitted to the department together with your return of income. So first example, we have calculated the taxable income and income tax payable amount, and then all the details we have entered in the relevant forms of the Commissioner General. Now we'll see another example, and from this example I can show you that how you can calculate the tax payable in a loss situation and how can fill the return with such losses. In this example, PQR is not a PQRS is a subsidiary company of ABC Group, and PQR company is providing construction services and trading construction equipments to the local market. Details of income have been given, but here you can see that they have calculated assessable income from business by doing adjustment. So according to the information, they have earned a loss during the year. Tax adjusted business loss from construction is rupees 12 million. Tax adjusted loss from trading activities rupees 8 million. Other than business income, they have derived interest income rupees 2 million, dividend income rupees 6 million. It says out of this dividend, 2 million received during the first period. That means actual dividend during the first period or a final withholding payment amount is rupees 2 million. Balance 4 million is form part of the assessable income. Expenses incurred on interest and dividend rupees 820,000. From this information, we'll see how you can compute the income tax liability for the year of assessment 2019-20. Since there is no business income, we'll see how you can compute the assessable income from investment. Gross interest income is rupees 2 million. Gross dividend income is rupees 6 million. From those gross income, they have deducted expenses rupees 820,000 and arrived to the profit 7,180,000. From there we have to remove the final withholding payment. During the first period they derived dividend income rupees 2 million, so it has been removed. When removing the final withholding payment, expenses connected on final withholding payment should also be removed from the tax computation. As I have calculated, expenses incurred on dividend derived during the first period is rupees 205,000. So I have disallowed that 205,000 in arriving the total assessable income from investment income. So my total assessable income from investment is rupees 5,385,000. So from this amount we have to deduct the business losses available during the year of assessment, but subject to the conditions available in section 19 of the Inland Revenue Act. For that purpose, first I split the investment income into two parts, as taxable at 14% rate and as taxable at normal rate. For this purpose, normal rate means 24% and 28%. So I have done it in a note like this way. Dividend during the first period we have removed as a final withholding payment. Then the gains and profit from dividend during the second period is rupees 3,590,000. Interest income during the first period is 1,346,250. Second period interest income is 448,750. There also I have computed gains and profit because there are some expenses also incurred on these dividend and interest income. So accordingly, gains and profit from investment, which taxable at 14% rate, is 3,590,000. Gains and profit from investment income taxable at normal rate 24% or 28% is the total of 448,750 plus 1,346,250. So those two figures I have taken to this table, and from that I am deducting the available loss. So you know that construction services is taxable at the rate of 14% with effect from 1st January 2020. Therefore, it's we have to consider that part of loss as a lower rate tax loss. Therefore, loss from construction business, that is 1/4 of the construction business loss is 3 million, and the balance part is 17 million. We have total losses 20 million. Construction loss is 12 million. Equipment sale or the trading related loss is 8 million. Out of that 20 million loss, 3 million is lower rate loss, and balance 17 million is higher rate loss. So first I have used that 3 million loss to deduct from the lower rate investment income against the lower rate investment income. So thereby I have deducted 3 million, and 590,000 is still available under the investment income. So here I have decided to use higher rate losses to set off against this lower rate income. Therefore, I have transferred 590,000 higher rate loss to lower rate profit. Therefore, 3,590,000 I am deducting from investment income as a business loss, and finally my entire investment income I am going to set off against the business losses. So total assessable income I have deducted against the available business losses. Therefore, total assessable income is nil, and total taxable income is also 0 for this year of assessment. However, I am still having business losses to carry forward to the next year of assessment, that is 14,615,000. Since I am not having a taxable income for this year of assessment, the tax paid at source as non-final withholding tax credit I can claim as a refund. So I am having 10,000 paid on interest income as withholding. That amount I can claim as a tax credit and as a refund. So in this year of assessment, my return will be ended with the refund amount of rupees 10,000. So we'll see how can fill those amounts into the return forms. As you can see, first I have to mention whether this company is a resident company or not. As I have shown here, I put a tick on the cage of resident. In this form, in the first page, you can see that up to cage number 130, there is no anything to be filled because there is no exempted amount, no assessable income, no taxable income, and no income tax payable. So I put hyphen for each cage, and I have entered only amounts to the cage 140, and that amount I have claimed as a refund by declaring under the cage 160. We'll start the schedule from the table available at the beginning of the schedules. In this example, we don't have exempted amounts. We don't have qualifying payments, remittances, ESC, and notional tax credit. So I have put cross in relevant cages and ignore those schedules. Others are required with compulsory schedules. So I put ticks in schedule 2B, 6 and 7B. So those compulsory schedules and whatever the schedules which are relevant for me should be attached with the return forms together with accounts and other information. In this case, you have to start the return filling from schedule 2A and 2B. We don't have business income, so we can put hyphen in all cages of subschedule 2A1. In subschedule 2A2, interest and dividend income should be entered with activity codes, but other than final withholding payment. So we had dividend income during the first period. It's a final withholding payment. Income which are forming part of the assessable income should be considered for 2A2 investment income. Then take the total of investment income into schedule 2. So you can see that I have taken 5,385,000. The total gains and profit declared under subschedule 2A2 into the summary of assessable income and then deducted the losses. Thereafter, with the schedule 2B, we can fill schedule 2B or loss schedules. There also you should start from the subschedule 2B1, which is available for business losses. These schedules have prepared by facilitating the loss deduction in accordance with the Section 19 of the Inland Revenue Act. First, your business loss should be categorized according to the applicable tax rates and then enter into the relevant cages. We have loss taxable from the business at 14% rate and normal rate. So I have entered those loss under the loss during the year in relevant cages, then take the total losses. In this case, we don't have business losses we don't have brought forward business losses, but to deduct from investment income, I have transferred the business losses incurred during the year to investment income. Balance is carried forward to next year of assessment. Therefore, I have transferred rupees 3 million and 2,385,000 for investment schedule to deduct against the investment income, and balance have been carried forward to next year of assessment. Subschedule 2B2 is for special losses, and if you are having leasing losses or losses due to the enhanced capital allowances, this schedule should be filled as you have done in previous year of assessment. Subschedule 2B3 is for investment losses. We don't have investment losses, but we transferred business loss to investment, therefore we have to fill it. Since lower rate profit is high, first we have used available loss, that is rupees 3 million, and then for the balance amount we have transferred rupees 590,000 from higher rate to lower rate. Ultimately, entire investment income will be set off against loss, and the total loss deducted should be entered into cage 30.B.30, and then take that amount to the schedule 2B and again to the schedule 2. So in schedule 2, assessable income from business, investment and other sources are zero. There is no anything to declare under the first page of the return, but if anything in your return, take those amounts to relevant cages and fill the return accordingly. So you can see that under the total of assessable income, there's no anything to be declared, because we have utilized investment losses business losses against investment income. Therefore, nothing to be declared under the first page of the return of income. If you are having foreign losses, you have to declare same under subschedule 2B4, but in my example I don't have foreign losses. then the tax credit schedule should be filled. In this case, we have non-final withholding credit on interest. Therefore, you have to fill the subschedule 7B for that, and no need to attach your withholding certificate, but schedule prepared in a CSV format has to be submitted. In any case, if you are having brought forward withholding on advances, you can declare the same under the claim during the year. If you wish to carry forward withholding credit as you did in previous year for advances, you can do it by declaring the same under the cages available for amount carried forward. If not, you can claim the entire non-final withholding credits for this year of assessment, because withholding tax has been removed with effect from 1st January 2020. Anyway, this carried forward treatment is applicable only for the withholding deducted on advances. Other non-final tax credit, if you are having any other non-final withholding credit, you have to claim during the year of assessment. So in our case, we have 10,000 amount of interest withholding credit deducted on interest. That amount I have entered under the rate of 5% and claimed during the year. Same I have entered in cage 140.12 and deducted the same. So this 10,000 amount I have taken into the cage 140 of the first page of the return, as I have previously displayed. So likewise, you can claim the tax credit with a refund during the year of assessment. Other than that, we have final withholding credit as well. Dividend deducted, withholding deducted on dividend income during the first period. Since withholding tax has been deducted, you have to enter those detail in subschedule 1, and here I have entered the details and declared the same. So if the withholding agent has not deducted withholding on dividend income, you can use the subschedule 2, and the relevant payment should also available in the first page of the return, that is cage number 120. So from my example, I have discussed all the relevant schedules other than few schedules. So I will explain the applicability of those schedules as well. Schedule 5 is applicable only for non-resident entities, and if they have remitted any profit during the year, then the schedules should be, then this schedule 5 should be filled. As defined in section 62 subsection 3, remitted profit means amounts remitted or retained abroad out of the profits and income of the non-resident person that are subject to income tax in Sri Lanka. So those amount you have to enter in cage 110.1. Any amount received outside Sri Lanka by or on behalf of the non-resident person from conducting business in Sri Lanka that is subject to income tax in Sri Lanka, excluding dividends paid by a resident company to the non-resident person. So those amounts also form part of the remitted profit. Then that amount you have to enter in cage 110.2. Thereby you can fill the schedule 5 of the return of income, and the details should goes to the first page of the return. Other than that, there are 3 schedules. One is notional tax credit brought forward according to the transitional provision. if you are having notional tax credit brought forward as provided in the transitional gazette after the deduction in previous year, you have to fill the Schedule 7C as well. Schedule 8 is not compulsory. If you are submitting your manual tax computation, there is no change in the Schedule 8 compared with the previous year. If you are in a position to prepare the Schedule 8, please submit the same. If not, attach your tax computation with the return of income. Then financial information coming under the Schedule 9 should also be filled and submitted based on your financial statements. We have published a notice on 25th November 2020 regarding the transfer pricing information that you have to fill under the financial information. So you are advised to refer the notice when you are filling the Schedule 9 if the transfer pricing details are applicable for your company. Thank you very much for your effective listening to this video presentation.